All right, so support resistance zones. So at some point in your trading career, maybe even right now, you have probably tried using support resistance zones. You draw the little boxes on your chart, or you draw the lines on your chart for the support resistance. You try to buy at support, sell at resistance, trade breaks and retests, all sorts of stuff, right? And you may find that you're getting really inconsistent results. What I'm going to show you is the way that I approach support resistance trading, and you're free to copy it if you want. I also have publicly called out all my analysis and trades for the past 5 years in my free Telegram channel. If you hit the first link in the description below, it takes you to my website, and the link to my Telegram channel is right there at the top. You can watch me do this live every day. In this video, what I'm going to do is I'm just going to give you the whole background for exactly how I approach it, and we're going to see firsthand, are they complete garbage, or is there actually a little bit of usefulness to support resistance? Let's get right into it. I'm going to share my screen here. We're going to go to the charts. Now, the first thing that I usually have people admit to themselves is that when you are drawing these little boxes on your chart for where you think price is going to bounce at, it doesn't really have any predictive power. Support and resistance, the usefulness comes not in the sense that it helps you to predict which way price goes, because it doesn't. The usefulness for support resistance is that it gives you a good way of controlling risk. It gives you a way of saying, if I enter a trade right here at the resistance zone, and I have a stop loss just past the zone and then a target just below the zone, for like a minimum of a 1-to-1 risk to reward ratio going into the trade, it gives you a way to say, if I enter here and I have an invalidation here to stop out and a target here, gives you a way to structure your risk. They're great for that. Support and resistance, though, you're roughly going to see that you could draw a support resistance zone almost anywhere on the chart, and they have zero predictive power. But they're still useful, and they're useful for this reason, that they give you a good way of controlling risk. Now, when it comes to support resistance zones, here's how I use them. I go to a chart. We'll start with a completely blank chart, and I'll show you a trade that I actually took literally yesterday. So I took a trade right here. I was on the 4-hour chart. I noticed that CAD JPY just appears to be going up and up and up. So some people might very creatively call this an uptrend. Okay, very simple, right? It just looks like price is going up. So where should you enter within an uptrend, right? There's a million places to enter. You could literally just buy anywhere. You could buy like right here. But how do you know where you're going to get out of the trade if it starts going against you? Because you can't just hold it forever unless you're willing to blow your entire account. If so, that's cool. Be my guest. But if it starts moving into profit, where are you going to take profits at? You don't. And what are you going to size your position at? How much are you risking for the trade? Have you even defined the risk for the trade? If you enter anywhere and you don't know where to close the trade at a loss or a profit, in my opinion, you're going to have a very difficult time having any sort of predictability, sustainability in your system, and it's really going to impact your profitability in a negative way. Just my opinion. I've been doing this for 8 years. I've coached thousands of people on how to trade, and I see that it gets really inconsistent when you're not defining the most basic part of trading, which in my opinion, the only things I focus on is just keeping things simple and controlling risk. I took a trade here yesterday, and it was this right here. It was this support resistance zone. Why did I draw a zone here? It just looked like price was bouncing here as resistance once, twice, a third time. Broke above the zone and came back and tested. And it did all this within the context of this little uptrend. I don't use trend lines. I just look at the chart. It's not that complicated. You don't have to do anything fancy to determine what the trend is. Just look at it. If it looks like it's going up, it's probably an uptrend. If it looks like it's going down, it's probably a downtrend. And if you don't really know, you probably shouldn't be trading it to begin with. Some people will call it a range, whatever it is. So price broke above the zone, came back and tested. Now, to get into a support resistance trade, what I did is I entered here at the zone. I had what I call an invalidation. All this means is just the place where I put my stop loss at. I had an invalidation below the zone and a target of a higher high. So I took this trade. We'll actually go and look at this trade right here. I'll show it to you here. So it's this right here. It's a CAD JPY trade, right? Here's a screenshot of the actual trades that I took. And I actually added to this one because I add to some of my profitable trades if I can. But essentially you see it's just the same thing, right? So this is the support resistance zone. It broke above, came back, tested. When it started to bounce, I bought. When it went into profit, I added another position, and then I moved the stop loss for the first position to break even. That way I maintain my risk at only 1 unit of risk for the whole time. However, my potential for profit gets bigger and bigger and bigger as it cascades to the final target. So this one did in fact hit the final target, and it was all just based on a simple break and retest of a support resistance zone. Same thing right here. This is another trade that I took that I called on my Telegram channel. Euro GBP. Price was at a resistance zone, and when it looked like it was bouncing away, I sold. Nothing insane, nothing crazy. And then I took profits literally right here as the session was closing, so roughly around that price right there is where I closed at the next support resistance zone. So it's the same stuff over and over, and I literally took this trade yesterday, and it was just a break and retest of a support resistance zone with a little bit of an added context that it wasn't an uptrend and it was likely to go up and make a higher high anyway. Look at what the trade looks like. Support resistance gives you a way to enter at the zone, gives you a place to define your risk at, and once you define your risk, you can use a position size calculator to calculate your lot size. In this case, I had risked $5,000 on this trade per entry, and it meant that if it goes below the zone, I lose $5,000. Now, on this trade, I actually made $10,000 because I had 2 entries, and it pushed up to my final targets where I closed. So that was great. I made double what I risked on it while maintaining the same 5K risk throughout the whole duration of the trade. I was never exposed to any more than 5K of risk. So this bounced up. Again, it also gives you a way of taking profits. The way I take profits is I typically just drag my target to like a 1-to-1 just to start the trade off. And if it gets to the target, I make money. It's that simple. You could do a 1-to-2, 1-to-3, 1-to-4, 1-to-5 risk reward ratio. You could do the ICT, smart money, order block, liquidity, fair value gap distribution, institutional candle, order block, liquidity, bank manipulation strategy, and get a 1-to-69 risk reward ratio. You're free to do whatever you want. I've just found 1-to-1 risk reward ratio gives me a really simple way of controlling risk. And since I close most of my trades early before they hit invalidation, meaning if this would have just broken below here and broken the zone, I probably would have closed right there. That means I'm taking roughly only like maybe 25 to 50% of what the original risk was. So my real risk on this was more likely to be around $2,000 or $3,000, not even $5,000. But whenever I have a profitable trade, it's the full unit of risk in terms of profit. So if I risk 5K to make 5K, and on most trades, when they hit the target, I'm making 5K. But on most trades, if they lose, I'm losing like 2K or 3K. It all averages out to where I'm just statistically profitable. And this is even with a 50-50 win rate. This is like if we're just assuming support resistance as random chance, and it's going to break past the zone 50% of the time and bounce 50% of the time, it just gives you a great way of controlling risk, even if you're only right half the time, which is no better than a coin flip. That is why I love support resistance, and this is why I find it so useful. I'm going to throw in one more example here, and then this is going to be the whole video. Then you can follow my trades live at the first link in the description. So let's go to another currency pair. Let's click through the charts here. Okay, so this is a setup I'm waiting on right now. This is a support resistance zone. Prices come to this support resistance zone yesterday. It broke through it. I actually got into a buy here at the support resistance zone. Then when it pushed up and started going back down and I thought it was going to make a lower low. I ended up closing here. I took like 1/4 of my risk and loss. So on this one, I had risked $20,000 with an invalidation way below the zone. I took about a 5K loss on this yesterday. It was actually even less than that. It was like 4K of a loss. So that was like 1/4 of what I had risked on it. However, if it had bounced like it ended up doing today, I would have made like 20,000 on this. That's why I like just starting my trades with a 1-to-1 risk reward ratio off support resistance. What am I looking for on this one? Here's exactly how I'm going to structure my trade, right? Very simple. There's not a million things on the chart. There's just the most obvious support resistance zones. I don't use zones where price breaks through it a million times. Zones like that, I don't even really see a zone there to begin with, but I'm just saying some people draw these really crazy zones where price slashes through it over and over again. I typically just prefer to use the zones where it's very clear, because your risk can be clearly defined, because you know right there's previous highs, there's previous lows. It's all very, very obvious. Your brother and sister and grandma and significant other and extended family members and your dog can all look at the chart and everybody agrees like, yeah, it's a pretty clear support resistance zone. I only use zones like that, zones that are super, super clear. So with this one, how I'm going to structure this trade is when price comes back here down to the zone, you can see that I have an alert right here. So that's the alert sitting there. I'll get an alert, a notification to my phone from TradingView because I've got the TradingView app on my phone. And it'll say, hey, AUDUSD is at the zone. So what I'll do is I'll just go in here. And the arrow thing is just to show what I think is going to happen. But I'll go in here. My stop loss will probably be right there, just my hard stop. But I'll probably get out of it much sooner if it starts to break. And then it will give me a nice potential for profit because it's a pretty easy target to hit, especially if I think it's going to go all the way to the top of this range here. So price comes back to this zone and I buy. How will I calculate my risk? Well, it's 57 pips of risk. If we go to a position size calculator like this one right here on my screen, you can go to, we just type in AUD USD. Then I'll do the account size, doesn't really matter because I just do this here where I swap with money. I type in how much money I want to risk on the trade because that's what's important to me. And then for the stop loss, I believe it was 37 pips, right? So 57, excuse me. So it's 57 pips. So I do that. I just leave the trade size at 1. I hit calculate, and that would mean it's going to be about 17.5 lots. So what does this mean? This just means that if I buy AUD USD with a 17.5 lot size, and I close the trade at a 57 pip loss, that will lose about $10,000. It also means that if it does in fact bounce here at this zone, so it comes down here and then starts to bounce and then it goes up, that means that I will make a $10,000 profit. And that's if I don't even add to the trade. And the worst case scenario is I lose 10,000. But more than likely, it could break below the zone. If I think it's not going to work and then it comes back to retest and it finds resistance, I could probably just get out of it there around break even. Everything always works out. So my losses usually average much smaller than what my average winners are. And that's how I remain profitable even with a 50% win rate, because I generally make more on my winning outcomes than I lose on my losing outcomes long term over a data set of like 50 to 100 trades over an extended period of time. It's that simple. So with that being said, if you want to follow me and watch me do this live every day, I've been sharing my trades in my Telegram channel for a long time. It's been a lot of time. I just started the new 100K account a week ago. That account is already up to $110,000 right now. Over the past trading week, it's actually made $14,000 in profits. However, I've got commissions and swap fees since the sizing is so big, since the risk is so high for each of the trades. And I just do the same thing over and over and over and over. So that's all I have for you in this video. If you like this video, feel free to do whatever you want. Hope you enjoy it. See you in the next one. Cheers, my friend.